Good evening, everybody. Hope everybody's having a pleasant winter evening. All right. I guess everybody is sound is cutting out. All right. Let's see. And you got an echo, Roger. Check to see if you're getting an echo. That usually means you're in. You might be registered twice. Roger Sloan is registered twice. All right. Well, tonight what we're going to do is kind of delve into how you scan for the best possible trades each day. And this isn't going to be oriented directly toward any one scanning software. This you can be using on Metastock, you can use it on TCNet, you can use it on Thinkorswim. The concept's the same. Some of the numbers you're going to see are just going to have to be allocated toward what chart service you're using. And the good thing is, if you're having problems getting your scan set up, there's usually somebody in the chat room somewhere that can help you get set up. So anyways, as I am going through the scanning process, everything you're going to see is just pure common sense. There's nothing difficult about what we're going to go through. So the first criteria of any time I'm doing my scanning process each day is, what is the market doing? And as of right now, we can see that the market is in an uptrend other than today. But today, as we saw, we probably had a profit-taking day based on everybody that had big gains were taking profits today because they wanted to have it allocated to 214 versus 213 or 2013. Sound just went out. No, let's see. So anyways, first criteria is, which way is the market going? Are we in an uptrend? Are we moving sideways? Or are we moving in a downtrend? And obviously, whatever we use or whatever we analyze as far as the market is going to be how we're going to allocate our portfolio. If we're in an uptrend, obviously we're going to be moving have most of our positions long. If we're moving sideways, that might mean we have as many long positions as we do short positions, and obviously if we're in a downtrend, we're probably going to be more heavily allocated toward the downside. We've written up formulas for Metastock for the high probability patterns. TCNet, I'm pretty sure a lot of our formulas are on there for placing or putting in your scans. Which tools are you using to scan? I use Metastock. I use TCNet. I don't use the scanning techniques for Thinkorswim, but most of that information is available on Thinkorswim. If it's not, just ask Ed Seed in the chat room. He'll give you the formulas for what needs to be done in Thinkorswim. Any other scanning softwares that you're using, it's not difficult to write the formulas for each one. TC2000 is Warden Brothers. TradeStation wanted us to do the formulas for them. We've just never heard back from them. Stock charts, again, any of these softwares, you can, if you have to, if they don't have the formulas there already, they're very simple to put in. All the formulas are on our website. All you have to do is go copy and paste the formulas and put them in. So essentially, what we're trying to do is obviously scan for the biggest percent price moves or the strongest price patterns. And we've got scans where we can allocate additional criteria to tell us once we have a buy signal, where are we to the moving averages, where are we as far as breakouts. So we also have Metastock right now, as well as we've got one of our chats or one of our videos is the high probability patterns quantified. Through the years, everybody will ask, what is the strongest of the patterns? Or which signals are the strongest? And the answer to that is, most of the time, none of them are any stronger than each other. It just might be that in these market conditions that the doji at the bottom is the correct one. Next month, it could be the hammers. Next month, it could be bullish haramis or Morningstar signals. It's all based upon what the market conditions are. The main factor, though, is there's basically only 6 long positions and 6 short position signals that you need to learn, and that's not too difficult to learn. Russo, our website is www.candlestickforum.com. Let's see. Yeah, sometimes you might have to exit and come back in if you're having sound problems, but I guess that didn't do any good. They can't hear me. I have to let them know. Anyways, we have 12 major signals. Again, half are bullish signals, half are bearish signals. We've got 6, 7 price patterns that are extremely high probability price patterns. So the first thing I want to do is I want to eliminate the trades or the stock patterns. Can you only scan on your site? No, Tom, this information is to be available for everybody to be scanning on whatever software program they're doing. The formulas for each signal, if you can say the formula for a signal, then you can write it down and put it in. And again, most of the software programs basically have the formulas there. All you have to do is plug them in. So the first thing I do is you want to set up your trading universe. In my case, my trading universe is stocks that are greater than $5. And the reason for that is I know that every time I put on a trade, the probabilities of being in the correct position is greatly in my favor. So I want to get as much leverage as possible, and most brokerage firms will not margin a stock that's less than $5. So I want to be able to margin. Secondly, I want to be able to get in and out of my positions very quickly. I don't want to have to wait around 5, 10, 15, 20 minutes for them to execute a trade. So I usually put in, for a moderate size account, that I want to have the average daily volume over the past 90 days to be 200,000 shares or greater. Now that's my trading universe. You can do whatever trading universe you want to set up. If you are trading options, you might have stocks greater than $25 and average daily volume for the last 90 days, 400,000 shares. The reason for that is you usually like to have stocks that have enough volume each day that the volume in the options are where you can get in and out easily. And then you can also scan for stocks that are optionable. So you're eliminating all the other stocks out of your universe that you're not even going to be looking at. On the other hand, if you're like the small price stocks, you can scan for all the stocks that are 50 cents but less than $5. And in this case, you might want to say, all right, I want my daily average volume for the last 90 days to be 600,000, 800,000, a million shares per day. Again, so that on the smaller price stocks, you can get in and out easily. No, all the scans are not for uptrends. The scans are, I'm going to be showing you how to do the bullish scans. You just I'll go through the formulas or the criteria for stocks that you want to go short on. Again, this is not rocket science. This is just common sense formulas put in to the scans to look for the shares that we're looking for. So in Metastock, I've already got my formulas set up. You can't read it, but it's my trading universe, which essentially is what we just went through. The stocks greater than 5 and volume average more than 200,000 shares a day. On Warden Brothers, same scenario. And what this basically does, my criteria knocks my trading, or the 7,800 trading entities out there, down to about 2,750. And so even with 2,750, each day that I do a scan, no matter which way the market's going or whether it's not going in any direction at all, I'm going to be able to find 5 good bullish trades minimum. I'm going to be able to find 5 good trades bearish signals minimum. So I'll always have a supply, and because I'm probably not putting on any more than 1 or 2 positions on in any given day, I'm always going to have a supply that's greater than what I need. So that gives me lots of leverage or lots of opportunities to be in the right positions at the right time. Let's see what else we got here. Oh, so one of my first scans out of my universe is I want my stocks that I'm looking for greater than $5, average volume more than 200,000 shares a day, and then I add that my stochastics should be below 20. And I'm using the stochastics of 1233. What that essentially does is give me all the stocks that are in an oversold condition. And then the way I sort them is which stocks have had the biggest percent price move the next day. So essentially what that does is it finds stocks that have pulled back or at a bottom and are in an oversold condition, and then all of a sudden the bulls have started to come in. Okay. I don't know why. Okay. All right. We're just getting a warning here that we're getting a wind chill factor of -2 and that we might be having some problems with our internet. All right. Stochastics below below 20 for uptrend stocks, and stochastics above 80 if we're looking for short positions. Do these scans, again, Len, these scans work for all? I mean, these are universal scans. You can apply these to all charting services. And once you set them up, it's not like you have to set them up every single day. Once you set up the scans, they're there. Each day, the only thing you have to do is refresh the trades and see which ones of your scans are working. Yeah, this got a frozen internet. And all these are slow stochastics. Remember, the stochastics aren't anything that you set or hang your hat on. All we really want to see is the common sense perspective that if we see a candlestick buy signal in the oversold condition, the probabilities are pretty strong there's been a reversal of that downtrend. Conversely, if we see a candlestick sell signal in the overbought condition, meaning above 80 in the stochastics, the probabilities are that that uptrend is, that sell signal confirms, the uptrend is over, the downtrend is going to begin. The biggest percent move up or down when stochastics are really below 20, up to catch bounce or down to find flush out. Yes, well, the biggest percent move to the upside is going to, again, show you where there's probably a reversal. If you're short and that buy signal isn't confirming, obviously you're going to have it heading down further. And remember, where do most people sell? They panic sell at the bottom. Where do most people buy? They buy exuberantly at the top. So you can use it in both directions, but you usually don't have to on the short side. That if you're short, all you really want to make sure is that you're not seeing a buy signal moving in the opposite direction of where you want to be. Obviously, your trade is going to be. That was mumbled out nicely. If you're short, you want to make sure that you're not getting a confirmed buy signal in the oversold area. Also, you can also add to that oversold condition that you're looking for dojis. You can, so essentially, on something like this, you were oversold stocks. Now you add one more criteria, your formula for the dojis. Now you're looking for all the dojis in the oversold area, or the hammer, or the bullish harami. So, in all your softwares, you can add the different formulas, the dojis, the J-hooks. We've got our power signals in Metastock, and the patterns. So each day, once you hit your refresh button, it's going to be searching for those, and it does it almost instantaneously. Okay, so then when I've got my stocks in the oversold condition, I want to sort by the biggest percent price move. Why? Again, if you're in the oversold condition and you see a candlestick buy signal, and the next day they're showing strong buying, that means that buy signal is confirmed. Hammer is the same way. Remember, you've got 6 buy signals. You've got a doji at the bottom, you've got the hammer, you've got the bullish harami, you've got the bullish engulfing signal, and you've got the morning star signal as well as the kicker. So all you need to know is those 6 buy signals, and conversely, all you need to know is your 6 sell signals. A doji at the top, shooting star, bearish harami, bearish engulfing signal, dark cloud. Whoop, I forgot the piercing signal on the buy side, and a bearish kicker. So an oversold price with a candlestick signal with strong buying the next day is pretty much telling you they're confirming that there's been a reversal at the bottom. So we're looking for scans that will show us this type of signal. This was just a couple of days ago where we have a bullish engulfing signal occurring right on the 50-day moving average. As we're going through our scans with all the oversold stocks and we come across something like this, we just flag it and we put it on our watch list. If we see a pattern that looks like this is basically how I do my scans, is if I've scanned for the oversold stocks and the biggest percent price move the next day, this looks good, so I'll flag it also. Now, I'm not doing a very strong or very deep analysis. All I want to say is, yeah, this looks good. I want to look at this again. Biggest percent move while still below 20, yes, or that your buy signal the previous day was below 20. Should that say buy instead of buy? I don't know. What did I do? Is there a screen with this presentation? Yes, Tom, there should be a screen up. The 8 EMA or the EMA and 8 EMA, yes, they're going to be functions of your buying, but not relevant for your scans right now. That would be more for sorting which trades are the best and how to get in and out of positions. What if it's at the resistance level? If it's at a resistance level, more than likely you're not in the oversold condition. You're already up toward an overbought condition. Okay. All right. So if I'm going through my scanning process and I'm looking for all stocks in the oversold condition with potential buy signals, this is what I'm looking for. Now, this one doesn't look exuberantly great. We have got an oversold analysis, but what type of setup do we have? Very quickly, our eyes can see that we might be in a scoop pattern, and notice where this doji was setting up. Anyways, I'm going to leave this for later. This one just looks good, so I would flag it. Bullish Harami. Not confirming yet. It needs to get up a bullish confirmation or close above the T-line, but I would flag this one. So essentially, I can go through on a visual basis and see which stocks are starting to set up. Now, does this one look good? It looks all right, but it still needs to confirm. So I'm going to say, okay, not now. I might just pass on this one for today. So that's how I do that quick scan. Now, the whole process or the whole purpose of doing the scans is to do it quickly. We don't want to be spending all night long analyzing what we want to do for the next day. My scanning technique, once your eyes become accustomed to which signals and patterns are that are bullish or various patterns, you should be able to scan for the best one or two trades for the next day in less than 20 minutes each afternoon. Don, your question, do you always need the price to close above or below the T-line before you make a trade? Not when you're scanning. You're scanning for that potential, and I will get to that here in a little bit. All right, so once I've gone through, now I might have on my list of stocks in the oversold condition and then sort them by the biggest percent price move. There may be 200 stocks that are in the oversold condition, but I'll probably be done looking at good stocks once I get through probably the first 20. Now, I'm going to click through the first 20 probably at the rate of 1 every seconds and just hit the ones, flag the ones very quickly that look interesting. Something like this, although it looks like it's bottoming out, it's not anything yet that I'd want to jump into. So I pass on that. So let's say out of the first 20 charts on the oversold stocks, I come up with 4 or 5. I put them into a what I call my watch list bucket, and that might be watch list 6. Now the next thing I can do is I can go look for individual price patterns, dojis that might be in the oversold condition, or some of the power signals. I can look for each one individually. So if I'm doing a doji scan, all right, here's some dojis in the oversold area. Not above the T-line yet, but at least I'll flag these and put these on my watch list. Oops, was that the same one? It might be. This one, yeah, that doesn't do anything for me, so I pass on this. So there might only be 10 doji charts in the oversold condition. I might only click on 1 or 2 to go. If I'm missing your questions, don't worry. I will stay as long as we need to answer all questions. So if I've skipped it, it's because they're scrolling by so fast that I'm not getting all of them. So this one I would pass on. There's just nothing here that tells me this is a good chart. So I would, maybe out of my 10 scans that came up with dojis in the oversold condition, maybe I've clicked on 1 or 2. But I moved those 1 or 2 to my watch list 6, my bucket. Now, again, stocks in your universe are in your whole universe, meaning in my whole universe, remember, the stocks greater than 5, and more than 200,000 shares a day, but without the criteria of stochastics being in the oversold area. What would be the reason for that? Well, right now in these market conditions where the market's been going up for 2-3 months, if you've got stocks that are in the oversold condition, there's probably something wrong. So I want to be looking at the stocks that had the biggest percent price moves, and I'm just going to sort my trading universe by the biggest percent price gain. Why is that? Because I might have patterns that are setting up, like a fry pan bottom, and if this one looks good, I'll go ahead and flag it. Or I have a J-hook pattern that's starting to break out. I'll go ahead and flag that one. And again, this is because the stochastics on the patterns are not going to be in the oversold condition. So I go through and I find chart patterns that look good. Now, these are all done probably within the last day or so. So these are fairly recent charts. CYTR we recommended, I think it was on Tuesday, because it was setting up. It gave us the alert with a gap up, big percent price move. When it came up on our scan, we can visually see this is a J-hook pattern in progress, and it even traded higher today. But that one was flagged. This one, also kind of a rounding curve, a little morning star signal, but notice what our best friend is, a little kind of a signal followed by a gap up above the T-line. Again, I'm not analyzing this any more than saying, yes, this looks like a good-looking chart. I'll come back to it. So I flag it. I'm looking for things that are in a breakout potential. This is XON a couple of days ago. Broke out. I want to look at this because what happens usually on a breakout? Usually very strong price moves. Again, I'm not analyzing it any more than that. Just this analysis, when I'm looking at it, will probably take about 3 or 4 seconds, only because I can see that we've come out of some buy signals and we broke through a resistance level. So essentially what we're doing is we're looking for charts that have potential. This one's our fry pan bottom. This is our classic SB. Fry pan bottom, strong price move, pull back to the T-line, bullish engulfing, J-hook pattern setup. We flag that one. This one's out of place. This is kind of, it's broken through the 50. What's our upside potential? Here and here. That looks good. Let's flag it. Another one. It's had a left-right combo, a doji sandwich, broke out through this resistance level. Let's flag this one. Again, these are all showing up on the biggest percent price moves. BIDA had our normal little double doji setup, left-right combo. This one we looked at today as far as buying on positive trading. But it would have been flagged because notice real quickly with your eyes, it bounced off the 50. It's got a rounding bottom, and it's got buy signals continuing to the upside. Whoops, what did I just do here? ARIA, another one that came out of a slow curve, pulled back, did a morning star signal right on the T-line. We flagged that one. So as I go through, the best charts, obviously, are going to be the biggest percent price moves, are usually going to occur out of that 2,750 stocks on the universe. They're going to usually occur most likely in the first 100 or 200 stocks. So I don't have to go through 200 or 2,750. I essentially have to go through approximately 200. And more than likely, on a normal market movement day, I'm going to have within that first 200 stocks probably about anywhere from 10 to 40 good stock chart patterns. And they're all being flagged, and they're all being put into a bucket watch list, just kind of accumulating them all in one bucket. Here's another one. Oh, this is what I was trying to find today, is that little scoop pattern that did the slingshot effect. Now we're looking like we're doing a J-hook pattern, so I flagged that one, because if this is wave 1, wave 3 could be the same potential. Here's one that's setting up, had a big percent move, but right now I wouldn't be buying it because it's a fry pan bottom, which means it's not going to do anything exciting until it breaks out through here. So this goes on my fry pan bottom watch list because I would be more interested in it over here. A lot of people say, well, how do you scan for fry pan bottoms? We have a scanning formula, but more than likely you're going to find most of your fry pan bottom setups well before they get to the breakout area. All right, and then we also have our power signals and patterns, which are the signals and patterns quantified. Again, people have always asked which ones are the best ones. None of them are any better than others, but there are a bunch of, I say a bunch, there's probably a total of, I think I've done this quantified with somewhere between 12 and 18 price patterns that would give you the strongest percent price move potential if they, not if they perform. The probabilities of them performing are extremely high, and not only when they perform, they will perform with inordinate profits. So, for example, our best friend, which is the doji gap up in the oversold area, is going to produce a very strong price move. The left-right combo, which is a doji followed by a bullish engulfing signal, is going to provide a very strong price move. A fry pan bottom breakout is going to produce a very strong price move. And things like the kicker signal, which is our strongest of all our candlestick signals, is usually going to produce a very big price move. So one of the first criteria for doing my scans, again, was stocks and oversold, then the biggest percent moves in the trading universe, and then I might pick out one or two of the signals, like a doji in the oversold area, but definitely I do a kicker signal. Now, a kicker signal will occur, when they do occur, they aren't very often, but when they do occur, they're going to produce a big price move. But a lot of times, just technically, here's what we expect coming out of a kicker signal, is a big, strong price move. But because they don't occur very often, they still will set up results for a good chart pattern that this is technically a kicker signal because it's a little dark body followed by a gap up bullish body. But it's more of a Morningstar signal. So we definitely do not throw this one away because that's a very good chart. So a lot of your scanning scans are going to find good charts, whether they're a true kicker signal or whether they're going to be signals that you're going to want to flag and look at again later. So let's say at the end of our scanning, we have come up with 47 good-looking charts. So how the heck do we go and find the best one or two the next day? And that becomes a process of knowing which signals and patterns, knowing which way the market is going, and going back and saying, all right, what's all the criteria here for this chart? Well, we've got a bullish engulfing signal right on the 50-day moving average, stochastics in the oversold area. If it opens positive from here, it's breaking through the T line as well as this downtrending channel. If it breaks through this downtrending channel, where are we in wave 3? What was wave 1? Wave 1 went from this level to this level. That means our upside potential is here. Yes, that's a good chart. I'll reflag this one to look at again. And what the process is, we go through each chart pattern, say, all right, this looks pretty good, but it still needs to break through this downtrending channel. Even though it's broken through the T-line, I'll give it another day or so I won't flag this one today. Here's another one. We looked at this one before. Notice what we have right here on the resistance level, the T-line. We've got a doji. And what's our simple rule of a doji? If it opens positive the next day, it's probably going to go positive. And what magnitude? It'd probably be doing a doji sandwich, the same magnitude as that candle right there. Which means even if you're a day trader, you can find candlestick formations that allow you to make good profits just on a day trade. Or if you're a swing trader, the probabilities of being in the right direction at the right time on a positive open tells you this scoop pattern starting up. Our first target is here, and what do we know about the scoop pattern? The results are usually a very strong slingshot effect to the upside. So I would flag this one. So as I go down through the analysis, a little bit more deeper analysis, here's a bullish Harami, which looks good. What's a bullish Harami tell us? Tells us our selling has stopped. What do we want to see confirm? We want to see them open up positive the next day and close above the T-line. So this one, I wouldn't flag it, but I keep it on my watch list, my bucket list, and I'll check it in the next day or two to see if it has confirmed. This one looked okay, but nothing to get excited about. I'd pass on this one. This one has a nice slow curve breakout. Probably looking for a 45-degree off of here. What I really want to see it do is break out through here. So I might not flag this one today, but I keep it on my watch list to see if they're going to break this one out. This one did break out, JRJC. If this is our fry pan bottom and this is our J-hook pattern, what do we expect? We expect some more upside, especially now that it's broken out. I may flag this one, or I may think that's already the potential move. But here would have been our analysis that hopefully we caught this one over here, and the next day it did a doji right at the resistance level. Then we have a very simple trade the next day. If it opens positive, we're buying immediately because we're not in the overbought condition at that time. And that doji right on the resistance level has a very simple rule. They're going to move it in the direction how they open it after a doji, which means this day right here is going to be the same magnitude as this day. So if I'm a day trader, I'm buying it. If I'm a swing trader, I know that if this does a doji sandwich breaking out through this resistance level, that wave 3 of my J-hook pattern is in progress. Now, if I caught it on this day, I might say, well, I've already missed out on a good percentage part of the move. I'm looking for something more like this, where the move is I've still got upside potential. Here's another one, GST. Pulls back. There's that little slow curve, breakout, pull back, doji right on the T-line, positive open. That tells me we're still in an uptrend. I'd flag this one. We bought this one the other day based upon, we saw the scan showed us this big percent move after a bullish engulfing signal. If it opened positive the next day, we were buyers. Today, it came up through this level. But a couple of days ago, this was on our scan, and we were buying the next day, which was not only confirming this signal right here above the T-line, but when they were gapping it up toward this breakout area, which they've done or they've gotten to, and they've gone through it, which means wave 1, wave 2, our wave 3 is in progress. Is JRCC a dark cloud cover? No. Oh, isn't it a dark cloud? It might be. These are done 2 days ago. REGN, same scenario. Might not flag it today, but I'll keep an eye on this. If this breaks out through this level, I know I'm in wave 3. So as I'm going down through my 47 charts, I'm looking for things that might just be breaking out. XON, what's the upside potential? Well, if they've broken out through this downtrending channel and didn't come back to the bottom of the channel when they curved it back up, they could be in a slingshot effect that takes us all the way up here. So that's got good upside potential to it. ARIA moved up, pulled back, did a little Morningstar signal, traded positive today. Where's our next potential target? Well, we can see our next potential target is up here at the 200-day moving average, or even higher to fill this gap. So this has a lot of upside potential. This one gets flagged. And let's start running down through some of these. Here's another one, J-hook pattern. Notice where the uptrend started with a bullish Harami confirmed with a close above the T-line. You could be buying here, or if you happen to miss this trade, it still has potential upside of basically this type of price move going up here, which tells us we're probably going to come up here and test the highs. So I'd flag this one. Now, some of these are being flagged because I might use them to buy stock. Others might be a short-term option trade where I know I can get leverage as far as the timing and the price move. SBLK, there's that fry pan bottom. There's that little scoop pattern with a slingshot effect. Slingshot effect creates a strong price move, a pullback to the T-line, bullish signals, creating a J-hook pattern. So if this is wave 1, wave 3 has got this potential move. So I flag that one. And again, this one I don't flag, but I put this one on the back burner in my fry pan bottom. So at the end of my scanning, again, each of these formulas can be put into any one of your softwares. If you're having problems putting your scans into Thinkorswim, that's where you come to the chat room and just say, ask Ed C, how do I do the formulas for Thinkorswim? You might come in and ask somebody else how to do it for TradeStation. Now, Option Express and those type of trades, you don't do it for Option Express. Option Express is your execution software to execute your trades, not necessarily. Uh-oh, I've lost the chat room. There we go. Not necessarily scanning for those trades. If you're scanning for a good option trade, you're probably going to use one of the scanning softwares like Metastock or TCNet. Oops, where are we? All right. So, simple steps for doing the scans. Now, we're going to have a training session here probably within the next 4 Saturdays where we spend a whole 2.5 hours going from how you set up your scans, how you sort those scans, how you get your bucket full of good charts, and then how we go through the analysis of which of those charts work the best. And that's usually about a 2.5 hour process. We use that as kind of a Saturday morning where you don't even have to get out of your slippers. You just bring your hot chocolate and your coffee, and we go through it step by step. But by that time, hopefully, everybody has gotten their scans set up on each individual, on each one of your individual softwares that you use in scanning. Yes, you should be able to use this on VectorVest. Again, this is not the formulas that you put in to these scanning softwares are universal, and they're not that difficult. The formulas are on our website. All you have to do is go to I think you can even go to Warden Brothers and find most of the formulas. And all you have to do is take those formulas and whatever the codes are for each one of your software, scanning software, you just add those to that software. So once we know which way the market is moving, that's going to pretty well tell us what type of scan we want to do for the next day, whether we're predominantly looking for long positions, short positions, or we might be needing to find 2 long positions if the market opens positive, or two short positions if the market's going south. Yes, I scan the markets every day. It's not that difficult. Right now, we pretty much know what the market direction is. It's been up. Today it had a pullback, but it wasn't a reversal. It was just a pullback. The formulas are more like filters. They don't have the experience to recognize the pattern. Tracy, you will. I mean, once you understand what the signals and the patterns are, then you'll, just by being either reading the High Profit Candlesticks book or being in the chat room each day, you're going to get accustomed to what to be looking for. And again, this is not rocket science. This is just recognizing the signals and patterns that have worked a high percentage of the time, producing profitable trades, not for the last 5 years or 10 years or 20 years or 50 years, for the last 400 years. If you go to our website, candlestickforum.com. You go to the left-hand column and you scroll down, you're going to find the tab that says Signal Formulas. Okay. If the trend is up, do you bother scanning for shorts? No, because I want to go with the flow. Now, that doesn't necessarily be some good shorts in an uptrending market, and there won't be some good buy signals in a downtrending market, but I don't want to fight the trend. I don't want to see if I've grabbed the oddball stocks. I want to be going with the flow. If you have a strong chart pattern and the market's going up, you're probably going to get a much greater return than finding a short position when the market is going up. Let's see. All right. So the next thing I do is scan for the charts with the oversold conditions with confirmed buy signals. Third, I go to scan my trading universe for the biggest percent price moves so that I can find the patterns, the J-hooks, the fry pan bottom breakouts, the belt hold type signals, things that aren't going to show up necessarily in an oversold condition, that the breakouts are usually going to occur when it's already up in the overbought condition. Then I can go and scan for each individual signal and pattern. So on any given day, all you have to do is hit the refresh button and all your fry pan bottom scans are going to produce the results, and probably most of the time they're going to be the same results you had yesterday, just a little bit more confirmed. J-hook patterns, it will show those. So you're always going to have a supply of charts to look at, and not only a supply, but a magnitude of supply. So when it boils down to sorting to the best charts, you basically have put all the elements that would put you in the right position at the right time in your favor, which could be a bounce off of moving averages, a bounce off a support level, a bounce off the Fibonacci numbers. Yes, and you can scan the Forex market. Now, you have to pick the timing or the time elements. You might want to make your Forex market charts on an hourly basis since they're trading all the time. How do you find the greatest price change? You just sort by that. You can just put that sort in there that you're looking for, the price moves that had the biggest percent price move during the day. Are the Metastock formulas on the website? No, but they're all on Metastock's website now. You can grab them there. All right, let's do this. Let me finish. I only got a couple more frames here. Once I accumulate all my stocks into one bucket, then I go through the sorting analysis process, again, of which ones have the strongest signals, like a doji gap up, or a gap up, or a kicker signal, or a bounce off the 50-day moving average, or a buy signal and a close back up above the T-line. But the more elements I can put into place, like a doji gap up off the 50-day moving average through the T-line with stochastics coming up out of the oversold area, the more elements I can put into place on that visual analysis. And again, this is all visual analysis. You don't have to know any formulas. All you have to do is be able to recognize what your strong price patterns are. That's why in the chat room, we go over the chart patterns over and over, because once your eyes start recognizing it, you're basically able to analyze something instantly without having to go through any major analysis. How do you know when the long-term trend changes? You go to your longer-term charts, your weekly and your monthly combination. Let's see. To the over 900 plus views on this site, additional bonus for you. Get Steve's expertise, honesty. Okay. All right. Thank you. Yes, and the nice thing about our chat room now is we get about 275, 300 people in there each day, and there's people with all levels of experience. And the ones that have the experience, fortunately, have the attitude of sharing. And so the the reason that people come to the chat room is not only are you in a learning process, but if you have questions, you can ask those questions because those are questions that other people are going to be asking or needing to know. I come in 2, 3, hopefully 4 times a day and try to answer questions. On slow days, it may only be at the open and the close. Do you still use the 3-day moving average? Yes. We will be doing a training session for members here in the next probably the week using the combination of the 3T, which is the 3 exponential moving average in combination with the T line, and how to use them with the 5 and 10-minute chart combination to get your best entry and your best exit executions. Are folks making a living doing this? Steve, I would bet you right now there's probably, I would guess at least 100 people in our room, if not more, that are trading for a living. Let's see. Whoops, let me finish up and then I'll let's see. Hold on, I'll get to these questions. All right. So once I've accumulated my 45, 50, 60, 70 charts, I go through a very good or cultivation process to find out which ones have the biggest percent price moves. We recommended ICLD the other day as it was doing its J-hooks coming out of a slow curve. So somebody was asking what percentage is correct. I would guess somewhere around 67 to 71% correct trade ratio. But the nice thing about candlesticks is the correct trade ratio gives you the very simple perspectives of investing that everybody should have. I often tell people that through the 35 years that I've been investing, you hear every money manager tell you to cut your losses short and let your profits run. And during that 35 years, I never heard one of them tell you how you cut your losses short and let your profits run. It's very simple mechanics with candlestick signals. If a candlestick pattern tells you you've got a buy signal, it'll also tell you when that buy signal is negated and you get right back out of that trade. So it used to be when I was before candlesticks came along, I could never understand why when I bought, the stock immediately went down. It's because I was like the normal person that was buying at the top and selling at the bottom. Candlestick signals completely reversed me where I could buy. Where do you grab for that fallen knife? The candlestick signals allow you to identify that. It shows you where the selling has stopped or when the exuberant buying has come in. So we're buying situations coming out of patterns that put us in the right position at the right time. Do we always get a 200% move or profit? Not necessarily, but the trades that we're in 70% of the time are going to produce profits for us. Some of them are going to be small, some of them are going to be fairly big, and this is the nice thing about candlestick analysis is that it puts us in situations where the probabilities of being in a big price move is greatly in our favor. But it also puts us in situations or shows us situations when that pattern doesn't work, we're right back out of it immediately going on to another situation where the probabilities are in our favor. And again, these are just recent trades. These are all within the last week. This was another one. I think this is Lynn, where we were buying. No, this may be. I should have put the name. I think this was HIMX coming out of a fry pan bottom and just putting us in the right direction at the right time. So what it basically does is it candlestick signals and patterns help you eliminate the emotional faux pas that we do and just say, all right, this is a pattern that we know what it should be doing from here. The probabilities are greatly in our favor that we're in our next wave, and we know when to be buying and when to be selling. So it essentially allows us to be in high profit trades right at the right time. I mean, this is a very simple trade. This is a little flutter kicker signal. And what would we know if this flutter kicker signal worked? Well, first of all, we know the rule of a doji. It's going to move in the direction how they open it after a doji. we know if they open a positive, we've got a flutter kicker signal, which means it's going to trade positive with a high degree of probability. And if it trades positive from here, it's essentially breaking out through this level. So do we always get big price moves like this? Definitely not. But when we do get into situations like this, we have a high probability of being in the right trade at the right time. It all boils down to that prices do not move based upon fundamentals. Prices move based upon the perspective or perception of fundamentals. And all candlestick analysis does is shows us in a graphic depiction of what's going on in investor sentiment when they're analyzing these trades. So essentially, scanning techniques for bigger profits were just, these scanning techniques allow you to put much higher probability situations in effect. As we saw today, I was mentioning to the chat room today that even though the market was down 130 points and the NASDAQ down 40 points, my screen was predominantly green because most of my trades are in patterns and price moves. They're still showing positive. Yeah, you don't watch CNBC. The best thing to do when you have a news broadcast station on is click on mute and just watch the ticker as it goes by. What account size do you need to do this for a living? Don, that's up to each individual. It depends on how much money they want to make. I go by a very simple rule that if I could be trading full-time, which I will someday if I ever get tired of doing this, but this is too much fun, you shouldn't have any problems making 10% return monthly on your account, on a trading account. Which means if you compound 10% monthly over a 12-month period, that's a 312% return. The more time you spend in this room, the less you will pay attention. That's true. When you say open after a doji, do you wait 5-10? No. When you see a price, if you're looking for this price to open after a doji, if you're supposed to be in an uptrend, if it opens positive, we know what the probabilities are that it's going to move positive. So we're buying immediately. Now, are there times when you have situations where it opens positive and immediately goes against you? Yes, but if you've already analyzed, I don't know whether I can do this. We had that situation going on today because we knew there was going to be profit taking after the new year. Let's see if I can do this with any grace. All right, this was, I know this is kind of a truncated chart, but this is our recommendation today was stochastics were still heading up. They were getting to the overbought area, but we had an up move. We had a J-hook pattern. We had a little wedge breakout. We were trading above this level. On Tuesday, we were buying based on a positive open, which would break us out. Today, we were buying based upon it would move in the direction how they opened it after a doji. Well, it opened and immediately sold off down here, but the overall analysis was that we were still in an uptrend. And when it came back up to this level, we're still in a situation where we would recommend this on a positive open, because what we have now is what we know is a double doji, and if it opens positive, that tells us all the consolidation that was going on in here is still in process. So if it opens positive, more than likely we're going to have another day like we saw here, which means we're moving away from this resistance level, which means we're in wave 3. Okay. All right. All right, let's backtrack. Whoops, that's not what I wanted to do. This is not what we wanted to do. There we go. All right, if there's any questions, please show the slides of the 5 steps, all right? First step is we want to know what the direction of the market is doing. Again, we want to be going we want to be riding with the tide. The second is, my first scan is stocks in the oversold condition, which means my stochastics are below 20, which ones, I have that universe, and let's say out of the 2,750 of my total universe, stocks in the oversold condition may be, well, in these markets, it may only be 70. In a normal market where you haven't had a strong uptrend, it might be 250. But if I analyze or if I scan by the biggest percent price moves of those stocks in the oversold condition, I'm probably going to find 5, 7, 10, 15, 20 that are good buy signals. They've come off out of the oversold signal after a candlestick reversal signal and shown a buy signal. So I click on all those. The next scan is I want to go to my trading universe, which is all 2,750 stocks, and see which ones have had the biggest percent price moves today, or yesterday, or let's say at the end of today, to see which ones were confirming patterns like J-hooks or fry pan bottoms. Next thing I can do is I can scan for individual signals, like a kicker signal, or a doji in the oversold condition, or a hammer in the oversold condition. And then finally, after I've accumulated all my stocks into one batch, then I can start going back through that batch and start analyzing which ones have the biggest upside potential, meaning the ones that have a resistance level that is 40% away versus a resistance level that maybe only be 7% away, which ones are bouncing off moving averages, which ones have closed above the T-line. I want to add all the positive elements I can. So I might go through that scanning process where the first time I go through, I knock my list from 45 down to 30. Next time I go through and analyze, I might knock that list down from 30 to 15. Next time I go through, I might knock that list down to the best 7. And then out of that best 7, I pick out the 2 or 3 that I think are going to be the best for the next day. Now, that doesn't necessarily mean the ones that I pick tonight are going to be the best ones for tomorrow on the open. It might turn out that the 2 that I thought were the best open lower and start heading down so the bulls aren't there, whereas one of the 5 of the other ones on that list is acting better. Just because I didn't pick them out that night as the best trade, I've still got a list of 7 stocks that all have high potential. And if nothing on those lists or that list of 7 work out, I can flip back to the previous list of 15, and one of those 8 remaining might be my best trade for the day. Let's see. All right, let me scroll up a little bit and see what I haven't answered here. Do you trade through earnings? Yes. Remember, the basis of candlestick signals are that they are the accumulative knowledge of everybody buying and selling during a specific time frame. And if they're buying, going into earnings, knowing that earnings are going to be reported tonight, that means probably somebody with a lot closer information to what's going on is buying. I still want to be a buyer. Oops, let's see. How do I stop the scrolling? Yeah, that's what Don's saying. I started with 300. Start small. I tell people, you shouldn't be afraid of candlesticks. When I first started, I would think, man, I'm going to see if this works. And the chart I was looking at worked. I wasn't in it. The next time I saw a good signal, I said, I'm going to see if this works. After about the 3rd or 4th time, I'm thinking to myself, what do you mean you want to see if this works? The Japanese rice traders that developed this not only became wealthy, they became legendarily wealthy. They were the powerhouse in Japan using candlestick signals, and they were trading the most basic of all commodities, rice. So I also tell people the first time I had sex, I was afraid. But then it was dark, and I was all by myself. Let's see, 100% compounded. 10% compounding, I thought it was 300 12%. Okay, we did the 5 steps. Trade through earnings. All right, still. What is my outlook for 2014? I have no earthly idea, but I don't care, because if the market tells me we're going up, I'll be buying stocks. If the market is going sideways, there'll still be stocks that show patterns that are bullish. If the market's going sideways, there'll be stocks that I can go short and still be making money. So I have no idea of what the market's going to do in 2014. I just know that I can read the charts and know that when I'm in a position, I'll be in the right trade at the right time. Is Metastock free? No, it's not free. It's all the charting services have a fee to it, but it's not exorbitant. It's very reasonable. Is this correct? To make a typical 10% monthly profit on your account, you must be fully invested, mostly at least in options? No, not necessarily in options. That would probably be without any options in it, but fully invested. That doesn't necessarily mean you're invested 100% to the long side or 100% to the short side. On any given day, if I think the market's going up, I still may have 1 or 2 positions to the short side. If I trade options, somebody asked me what my return is on options, and I didn't have an honest answer for them because I don't keep track. I kind of gauge it by that if I find another classic car that I want, I'll go trade my option account pretty heavy or my commodity account pretty heavy for the next couple of weeks, and usually come up with enough money to go buy another car. So it just acts like a cash cow for me. Again, each time I put on a trade, I just know the probabilities are in my favor. I'm going to make money. So if I've got 10 trades on, which means I'm 100% fully invested, again, not necessarily fully long or fully short, I know at the end of each day the probabilities are pretty good that the cumulative results of my positions are that I'm going to be positive at the end of the day. Tom, right now I use a couple of different brokers. Mostly I use Thinkorswim for my small experimental trading account, which is because I can buy stock, options, currencies, commodities, all from one account, not having to change back and forth to different accounts. All my previous talks are archived. They're all on the site. And does the technique work for those of us who check markets after they close? Yes. There's always methods, and right now, probably hopefully within the next 7 days, we will have our long-term fix area set up for those people that can't trade every day or want to be more oriented toward longer-term situations. Again, my idea of a long-term hold is probably 3 weeks or longer. I mean, some of them are going to be held for 6 months. Some of them are held for 3 weeks. But remember, in this day and age, with the communication so good and the technology moving so fast, there's going to be some situations that work well this month that in 2 months from now, somebody else has taken over the lead in that market. So I do not believe in the long-term approach anymore, because back when long-term investing was in vogue, it's because any information that you wanted, you had to go through your broker to get it. And any information that was out there, usually you had to read about it in the Wall Street Journal, and it was usually weeks later. Now, any information we've got right at our fingertips each day, each minute. So everybody makes their decisions based on that information instantly. Okay, let's see. Yeah, and I put out two or three stock picks every day. Not to give people stock picks, but the videos each day should give you a little bit more added education of why that pick is being made and what the market conditions are that made that pick a viable pick. What is the best time frame to trade with these signals or patterns? Don, at any time frame. These signals and patterns work just as well on a 1 minute, 3 minute, 5 minute, 10-minute chart combination as they do on a daily, weekly, or monthly combination. We'll have more jokes. People bought me joke books for Christmas. Let's see. How do you define wave 1, 2, and 3? Just not any Elliott wave. The things that Elliott wave and a lot of Jesse Livermore, all of them, said that prices move in waves because people's reaction to price movements are constant through the centuries. Don, yes, saw your email. I'm going to track the guy down. Okay, let's see. That's right. Yeah, everybody also have a good, good safe New Year's this year. Any option traders? And Steve, yes, we got plenty of option traders, and we have an option trading room on the website. That's a separate membership from the normal membership. Position size every time, so that if you are wrong, whoops, no big deal. My position size is, again, approximately 10% for each position for two reasons. One, each position, if it crashes, it's only a manageable part of the portfolio. That if something crashes on one day, it's not going to kill the whole portfolio. On the other side, each position is big enough that you want to pay attention to it each evening to see whether it's going to be adding to your profitability the next day, or it's in a doubtful position where you want to close out that position and move on to something with a much higher probability. In Forex, do you find candlestick patterns to be more reliable on the 4-hour or daily time frame? You can't do it on a daily time frame because there's nothing to give you open and close. So you pick out whatever time frame you're trading. So that if you're a fast trader, you might be using a 10-minute, 30-minute, 2-hour combination, or maybe even a 5-minute, 15-minute, 1-hour combination. Rudy, if you will email anybody interested in the option training chat room part, you just want to email Abraham at Candlestick Forum. Which vehicles do you trade in the options room? Mostly spreads, and what we do in the options room is we're not trying to teach new training methods. We're trying to take the simple training methods and apply them to which price patterns and signals work the best for that trading program, as well as which trading strategy is appropriate for the time remaining between now and expiration. That's more important than knowing all the triple condors or double butterfly with a half twist type thing. Which vehicles do you trade in the options room? Okay, let's see. Is it possible in daily stock picks to add a second list of 2 to 5 high probability stocks as a spare list in case the first ones do not confirm? Remy, Yeah, we try to do that. The only problem is that the logistics of that gets pretty difficult, because if we recommended two and they didn't work, and then all of a sudden one did work, then we'd have to say, all right, if you didn't do these two, so again, it's in the chat room, you're going to see those secondary ones. I usually come out and say, during the day, say, all right, here's some other ones that you want to take a look at. But the final decision for each person putting it on their position should be with each person. We're not trying to train people or supply people with the best trades in the world, which hopefully they are, but obviously 30% of our trades aren't going to work. So the whole point of investing with candlestick analysis is knowing what to do with each trade once it's put on. Hopefully you're in a profitable trade, but knowing what to do when the trade isn't profitable. The moving averages are the 50, the 200, and the 20 are all simple moving averages. And the reason for that is that every major money manager in the world uses those moving averages for their analysis. The fortunate thing we have with candlestick analysis is we can see exactly what decisions are being made at those levels. Somebody asked me a few weeks back, how many days do you need to confirm that a trend reversal has occurred? If it's after a buy signal, none. All we have to do is see that that signal confirms the next day, we're buying immediately, which does two things for us. We're in early before everybody else's techniques confirm, adding to our profitability. Number two, we're in early enough that if that signal or pattern fails, we're out very quickly with a very small loss. What is your time frame for buying options generally? 2, 4, 6 weeks? Those time frames, yes. 6 weeks out, we're buying usually calls out or puts outright. 4 weeks, still kind of calls outright. 2 to 3 weeks, we're probably putting on spreads. And 1 week, we're probably doing credit spreads going into the close, or the execution, or what I would say, expiration date. John, I didn't catch soybeans only because I've got everything invested right now in some options in the market. Looks like the metals are breaking down, yes. And we also, each night, as a member, Monday nights we have our member days. We go through the commodities, the currencies, and we do the same as an open chat on Thursday nights. But essentially what we're doing is showing people not necessarily the best trades, but showing the trades that look good, so that as long as you keep seeing it over and over, you're going to start recognizing which trade setups are the best. Because the whole point of learning how to use candlesticks is, if someday I get run over by a Mack truck or a wild deer, you'll know how to trade without having somebody. You'll know how to trade on your own. What software do you use for scanning? I use Metastock and I use TCNet. What software? Let's see. Do you find Bollinger Bands, Scalar channels? I've been doing all sorts of analysis for the last 35 years. The best technique or the best indicator that I've come up with was one of my own private training students, Rick Sadler, came up with the T-line, and that works better. We've had John Bollinger on a couple of our chats on Thursday nights, and he'll even say that his Bollinger Bands aren't necessarily for finding a good position to get into. It just shows you that once the position's on, whether it's too far out one way or the other, that you can be buying or closing out the position. Do you provide emails for options auto trade? Not an auto trade, just I put out comments each day. I put out the morning comments to the all the members, and then I put out option ideas for the option members. Let's see. Wayne, I think you've got a hiccup there. I couldn't read that if I wanted to. Oops, I'm still way up here. Diane, that's also up to each individual, whether you're trading in the money, at the money, or out of the money options. I put the recommendations of what you might do in each case and let each person do what they think is the best for their trading strategy. Yes, I do look at potential targets when I scan for candidates, because if I've got a good-looking chart that is going to run into resistance 8% above where it's trading right now or 40% above where it's trading right now, I'm going to go with the one that has a 40% potential to the upside. Are you buying, selling out that far, or are you rolling the trades? Usually I'm buying at maximum 4 to 5 weeks out. For example, when the December's expired, I was buying the January's maybe 3, 5, 10 days beforehand. Manford, yes. Let's see. Let me answer that in a minute. And then if the trade is still good when we get to near expiration, yes, we'll roll it over into the next day. We did that with Valero, which we made some very good profits with. Do you have a scan done now on how you time the entry? Yes, I've just finished a training CD. I say just finished. It's still in production on how to use the 3T in combination with the T-line, as well as the 5-minute and 10-minute chart combination to fine-tune your entry and exit strategies. Let's see. Can you get swing trade advice if you're at work? Yes. Most of my trades are swing trades, but candlestick analysis, again, is the cumulative knowledge of everybody buying and selling during a specific time frame, which means that time frame could be, if you're trading the E-minis, I used to trade the E-minis off a 1-minute, 3-minute, 10-minute chart combination. Right now I trade commodities off a 5-minute, 10-minute hourly combination. I'll trade the dollar off of more of a 30-minute chart. And then if you're a long-term investor, we'll probably be using the daily, weekly, and monthly combination to show more of a long-term pick. Let's see. Thank you very much. Yes, and Ed, we've got people in here. Ed C is probably one of the top ones for writing the right formulas for the different softwares. Can you give more stock picks per day, like 5 up and 5 down? Ben, that's why I'd rather teach people how to do that, so they're not depending on my picks. Once you learn how to do your scanning, my best, I don't want to say my best, a majority of the picks that we come up with each day are from what people have come up with their scans on the chat room. When I look at them and I say, this looks good, it goes on my list to be analyzing that night to see whether that's something to go after the next day. Do you have options course available? Yes. We, as a member, our membership fee is normally $97 a month. That includes all the chat room open daily, the Monday night chat room, the Thursday night chat room, and then about 3-4 times it'll be more concentrated during the winter months. But 3 or 4 times a month we will do a training session. We might do an hour on a Wednesday night showing your entry and exit strategies. Or like this session tonight where we show, all right, here's your framework for setting up your scanning. Or we might do one on how to use option spreads versus buying outright options. So we'll have training how to use the moving averages to improve the probabilities of being in a correct trade. How to set up your stop losses efficiently using candlesticks. And it's $97 a month. So in that $97 a month, instead of buying a CD on how to do the scans for $149, you'll probably get that for free in one of the training sessions during the month. And hopefully you get 2, 3, 4 of those training sessions each month. So you're probably getting somewhere around $300-400 worth of training information for the $97. What do you use for a stop loss against your 10% portfolio investment? David, that comes down to each individual stock positions. There's going to be candlestick, the signals are based, or the stop losses aren't based on any formula other than if you see a candlestick buy signal, at what point would that price have to come back to show that the bears are still in control? On some charts that might be a 0.3%, other charts might be 3%, another chart might be 13%. It all depends on the chart that you're buying. But the chart, if you're buying, is already telling you the probabilities are that you're supposed to be moving in a positive direction. Okay, Gordon, what was your question? Yeah, I'm trying. Things are still scrolling past me so fast. I'm just trying to pick out how can I use scans for Forex because they're, again, the cumulative knowledge of everybody buying and selling during a specific time frame. Somebody was asking about the Santa book. We got it out there too late. It got some very good reviews. Hopefully next year it will be a big success. Let's see. My write-off, right? I'm off. Okay, all right. Okay, yes, it's late over in the UK. Yeah, you can use it for ETFs or trading the diamonds, the Qs. Remember, again, it's candlestick signals are not for a specific trading entity. Candlestick signals are for showing you what is going on in investor sentiment, and as long as you have fear and greed in any trading entity, candlestick signals are going to show you what's going on. Do the averages have to be angling in the direction of your trade? Do the averages have to be? Not necessarily. Again, you'd like to have the more bullish positions in your portfolio in an uptrend and more bearish positions in a downtrend. But right now, and today was kind of a prime example, the Dow was down 100 and some odd points, yet I would say 70-80% of my charts were positive on the day. Not because I'm any great stock picker, I just happen to be in chart patterns that are still working in spite of what the overall market is doing. No, Jay, the option training the option trades are in a special room. That's a one-time fee, and it's a money-back fee. You get 30 days free trial. We're not trying to scalp money out of people. The reason we set up the options room was that we were getting too many questions and options in the regular room, which was detracting from the people that were still just trying to learn candlesticks. And so the people that wanted to use candlesticks and option training, we've set up a separate room. That's a one-time membership fee. And I come in there 3 or 4 times a day, 2 or 3 times a day, depending on how active the market is. Tammy, no, I'm not a great stock picker. All I'm doing is analyzing the charts that shown us in the past that you have a high probability that we're going in the right direction. Jay, that's a one-time fee to get into the options room. But I tell people, if you're going to pay for the options room, you definitely still want to be a member in the regular room because that's where the base is. I kind of analyze it as obviously painting a car, that you definitely need to have a good primer before you put on the shiny paint. So the good primer is the regular room. The shiny paint is going one step further and trading options with the information we get out of the candlestick signals. Oh, I think the annual fee for the options room is, I think it's $997 for non-members and $797 for members. Let's see, I've kept everybody way past bedtime. I hope I got everybody's questions answered. I know there was a ton of them earlier that just scrolled by too fast. So I appreciate everybody showing up on a cold winter night. We will be doing the 3T entry and exit strategies here probably within the next 7 days. And then we will probably be doing a full scanning training for 2.5 hours, probably within the next 2 or 3 Saturdays. Again, that's going to be a 2.5 hour session. So, anyways, thank you for showing up. Everybody have a good evening. We'll see you in the chat rooms.